At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, April 11, 2023, Troika stock falls 12% after filing shelf registration statement. A speculative market idea loses out for the day. Branding and marketing solutions provider Troika Media stumbled on Tuesday. The company filed a shelf registration statement, which has dilutive implications. Troika stock attracts speculators, but it's a highly risky trade. Amid another soft market session, Troika Media, Nasdaq TRKA, dubiously attracted attention, falling 12% on Tuesday morning before paring back losses to about 9% down in the early afternoon hours. Troika, which bills itself as a consumer engagement and customer acquisition consulting and solutions group, filed a shelf registration statement with the U.S. Securities and Exchange Commission. However, the dilutive implications hurt Troika stock. According to the accompanying press release, Troika filed a shelf registration statement on Form S-3 with the regulatory agency on April 7, 2023. Management previously announced on February 23 that it will seek to optimize the company's balance sheet and address its legacy capital structure, including its senior secured debt, and to explore strategic alternatives. Thus, the recent action represents one of these alternative pathways. Per Investopedia, a shelf offering represents a provision allowing an equity issuer to register new securities without selling the entire batch in one shot. Instead, the issuer can sell portions of total securities over a 3-year period without re-registration requirements or penalties. Aside from cost savings, a key advantage of shelf offerings centers on control. For Troika, management can potentially wait for favorable market conditions before deploying new issues of Troika stock. Of course, the downside that Investopedia points out is dilution. Whenever a company sells new shares, this reduces the value of existing shares. Troika stock intrigues but presents high risks. Although Troika stock suffered sharp volatility for Tuesday's session, speculators appreciate its mobility in the charts. Notably, Troika has gained roughly 140% since the beginning of this year. Better yet, it's not just blind enthusiasm that bolsters Troika shares. Last month, Investor Places Louis Nivelier targeted Troika stock as a high-risk, high-reward growth opportunity. Notably, even with Tuesday's red ink, shares gained about 6% over the past 30 days. Nivelier mentioned strong revenue trends and massive improvements in adjusted EBITDA as bullish factors to consider. At the time, Troika scored a B on Nivelier's portfolio grader. While compelling to market gamblers, Troika stock may present an unacceptable risk to conservative investors. According to the investment research platform Guru Focus, Troika suffers from 5 red flags and no redeeming positive factors. Among the concerns, Troika continues to issue new debt. In the past 3 years, the company expanded this liabilities line item to the tune of $66.5 million. Also, its Altman Z-score slipped to 0.66 below break-even. This metric indicates distress and implies bankruptcy possibility in the next 2 years. While Troika's sales trend impresses, posting a 3-year revenue growth rate of 31%, the bottom line is a mess. The company's net margin fell to 14.54% below parity on a trailing year basis. Therefore, extreme caution is necessary for Troika stock. Why it matters? Although Troika represents a highly speculative entity, according to TipRanks, the few portfolios it surveys that hold Troika stock love it. Rating sentiment is very positive. In the past month, Troika shareholders gained, on average, 7.8%. Thanks for watching. Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.